Hey yo, good afternoon viewers of the tube. My name is Tyler and welcome to the channel that brings you the best content in the crypto space and takes the money we earn and spends it on production to please your eyes. No webcam and green screen here, even though many people think it is. Yeah, nope, that's real. It's time for Chico Crypto. A store of value. The definition is the function of an asset that can be saved, retrieved, and exchanged at a later time, and be predictably useful when retrieved. More generally, it is anything that retains purchasing power into the future. In modern times, the most common store of values have been currency, of course, but also precious metals like gold. Although within the last 10 years, Bitcoin has shown its power in becoming a digital store of value. A couple days ago, a picture started circling around the internet which showed $1.6 billion in gold compared with $1.6 billion in Bitcoin held on a Trezor hardware wallet. The image is very eye-opening because you can visualize the benefits of Bitcoin over gold in just one image. So today I would like to break down Bitcoin versus gold, which is a better option for a store of value. What are the pros and cons of each, and what will 20 years down the road look like for each asset? Let's jump back to that image. It's obvious if you have a lot of wealth, holding it in gold is going to take up a lot of space. With a lot of space comes a lot of costs associated with keeping it safe. Now, I know there are things called ETFs where you don't have to physically own gold to participate in the price actions, but if you're seeking to actually own a gold asset, you cannot do so through the most popular gold ETFs like SPDR GLD shares. You never actually own a gold bar, bullion, or coin. Gold ETFs consist of gold contracts and derivatives and can only be redeemed for cash, never gold itself. Basically, there are only two ways to buy and hold physical gold. Buy it and store it yourself, or buy it and have someone else store it for you. Depending on the size of your investment, the storage costs with gold go up significantly. Small investments can be stored at home, but you're at risk for theft. Then there are bank deposit boxes, which start at $50 per year, although something people overlook is the contents of a safety deposit box are not insured by FDIC. So full safety will require insurance as well. Larger investments in gold will require using a private firm, known as a depository, which incur yearly fees of 0.75% to 1.25% of the total value per year. With Bitcoin, storing any amount of wealth can be done on a single private key in a Bitcoin wallet. This can be on your computer or a paper wallet, both of which I don't recommend for long-term storage. There are other options like physical storage options, like metal coins with the private keys embedded into them. Cassatius coins were the first, coming out in 2011, and actually have turned into collectibles since the maker was forced to shut down the production of them. Recently, one of these sold for nearly $30,000 with just one Bitcoin embedded in the private key. Much premium? Of course, today there are now many physical coin products out there which you can store your Bitcoin on for under $10. You can also make your own physical storage by engraving your private key into a metal object yourself. Then there's one of the more common ways today, a hardware wallet like a Trezor or a Ledger. Large amounts of wealth can easily be stored with Bitcoin, but just like gold, storing your private keys or passphrases at home include the risk of theft. But it's much easier to hide than a large amount of gold. But losing your private keys or passphrases is a real issue and has happened with Bitcoin many times. A large amount of gold would be much harder to lose track of. Let's now discuss the characteristics of both gold and Bitcoin in terms of supply. Gold is a finite resource, but the supply is unknown and not transparent. Every day they are finding new gold reserves and deposits across the globe, increasing the supply on a continual basis. Gold production is increasing decade after decade and shows no signs of slowing down. Now, there is a finite supply of gold on Earth, but what about space exploration? In 20 years, there is a major possibility we could be exploring space in search of resources, including gold. And this may come sooner than most people realize. NASA announced in 2017 that they would be launching a discovery mission in the summer of 2022. The goal of the mission is to arrive at our solar system's main asteroid belt in 2026 to explore a certain space rock called 16 Psyche. The asteroid is special because it is a massive hunk of precious metals, including iron, nickel, platinum, and, of course, gold. According to the lead scientists of the mission, the asteroid is valued at $10,000 quadrillion, which is definitely worth more than its weight in gold. With Bitcoin, the supply level is fixed and completely transparent. There will always only be nearly 21 million Bitcoins ever produced. Bitcoin has the well-known characteristic of a disinflationary supply schedule. In the beginning, many Bitcoins were produced each day, but as time goes on, the supply starts to fall until no new Bitcoins will ever be produced. This scarcity is one of the major factors people are drawn to investments in Bitcoin. Also, there is no finding new Bitcoins in the depths of space. Now, how about if the world was to go dark in an offline setting? Which would be the better option? Gold has for centuries been recognized as a tangible store of value. In ancient times, gold was always regarded as real money, and gold coins were used for the buying and selling of goods. If something major was to happen to the internet or the electric grid, you could still use gold to barter for food, land, clothing, and all your needs. Gold needs no electricity nor communications network to back up its inherent worth. On the other hand, Bitcoin is an electronic currency. Imagine if the electric grid was shut down and the internet went dark. Crypto exchanges would be done for, along with all other financial markets. Bitcoin and all other cryptos would be useless as a form of real-world currency. Even your bank debit and credit cards would be lifeless plastic. Although Blockstream satellites now broadcast the Bitcoin blockchain around the world for free to take out the risk of the internet going down, but there is still the risk of the electric grid shutting down, so gold takes the cake in the area of an apocalyptic type scenario. The last thing I would like to take a look at is the performance of both the assets since Bitcoin's inception in 2009. Bitcoin has essentially went from worthless to reaching a peak of nearly $20,000, but now sits over $5,000. A gold ounce started at around $880 in 2009 and peaked over $1,800, but has since settled down to just under $1,300. It's obvious which asset has performed better, Bitcoin. But gold has done what it has done for centuries, secured and slowly increased a person's wealth. I think all of you at home know my personal feeling on which is the better asset. Of course it is Bitcoin, but there are a few reasons gold is better. Bitcoin is young, gold is tested. There are many factors that could arise which lead to the downfall of Bitcoin. But yes, I am willing to take that risk. Another bull run is on its way. But just to let you in on a little secret, with the next one, I'm taking a healthy percentage out and putting it into gold to diversify my risk. Cheers, viewers. I'll see you next time.